Let's get more reaction to Uber's quarter and bring in Loup Ventures founder and fast money friend Gene Munster. And Gene, we should note that Uber has really turned around in the aftermarket. It's down only 2% compared to what it was initially. You know, the staggering more than $5 billion loss really stung investors. But what do you think is pulling the stock higher at this point?
Well, I'm surprised that the stock's not down materially on this, so I don't have a good answer of what's pulling it higher. I want to jump back on the call. And ultimately, what we have here is there's a yield question, specifically about international. This is an international growth story. When you invest internationally, you give on the revenue per rider because they tend to skew a little bit lower demographics in terms of income, but you gain on adding riders. And in this recent quarter, the revenue per rider basically went from $33 to $32 sequentially. Recall that Lyft went from 38 to 40. But the rider growth sequentially was the same as a percent between Lyft and Uber, up 6%. And you can say the law of large numbers, it's a 98 million versus a 22 million. But this is not a law of large numbers game that we're in right now. This is still an emerging market. We're talking about the potential of 1.5 billion people globally that could do some form of ride sharing. 98 million is a small number. And so I don't have a good answer of any sort of rebound in the stock here. Beyond this notion that that investors who believe in the story are willing to continue to wait this out. It's in essentially strong hands.
It sounds like you think that in the emerging markets where Uber is banking on for growth in terms of rideshare, Gene, you think the competition is much more stiff than we had anticipated.
Yeah, that's effectively what's happened. I mean, the Mexico example is representative, I think, of what potentially they're facing globally. And in the U.S., we're here with Lyft and Uber, and you'd think that Uber kind of has free reign outside of the U.S. to gain market share hand over fist, and that is not the case. And so you have two companies operating in the same general markets with very different strategies here. I would say that Uber is the more aggressive company in growth mode, international, and all these other bets with Eats and Freight. But ultimately, it begs the question, when you have this type of investment window, a multi-year investment window, is it best to be in more of aggressive mode or focus mode? And it seems that my read on this, as far as looking at the last two nights here, it seems the focus mode is the better play.
So Lyft is the better play at this point. And when you just compare apples to apples, Gene, in the United States, Pete was wondering if we should believe that Lyft is slowly taking away pieces of Uber's business here. Is that your conclusion?
Yeah, undoubtedly. I mean, the numbers are quite staggering, the difference what's happening in the U.S. So Lyft growing at 70%. The growth of Uber in the U.S., again, that's all U.S., is probably somewhere in the high single digits to 10%. That gap has widened in the last quarter. And so I think that if you just look at the U.S. as the best path to profitability, recall that Lyft is having the advantage of raising prices in the U.S. That's not what's going on with Uber's overall business. I think that there is a strong case to be made that you know, this market share loss is symptomatic of what's going to happen in the future in the U.S. for Uber.
Gene, great to speak with you. We'll let you get back to the conference call. We'll check in with you a little bit later on. Okay. Would you rather?
Oh, I love it.
Straightforward.
Would you rather Lyft or Uber?
Yeah.
I mean, straight bang, right out of the gates.
Yeah.
Well, the answer's got to be Lyft. I mean, I'm not saying you got to short Uber here. I don't know where Uber's going, but I think in terms of both quarters over a 24-hour period, at least Lyft gives you some indication that they might be on the right trajectory, whereas Uber, for every $4 billion of revenue, they seem like they lose $1 billion. That's not a win. Even I know that seems to be a bit of a bad formula.
You know, I'll take Uber. Why not? Because I look day over day. If you think about the market moves right now, Uber on a 2-day where they both reported in both terrible market conditions and good market conditions, Uber's outperformed by 4, including these numbers, by 4%. But the fundamental stories at their core are the exact same. It's the same industry. It's just one is a core play, one is not. A lot of people have given a lot of credit to Uber having all those other businesses. I don't think we should forget about them.